Okay.
Good evening.
Good evening to you guys, and a happy February to all our viewers out there that are first time home buyers. Although we are located in Virginia in the Hampton Roads community, I am Tierra Walker Holloway, principal broker, Walker One Property Group. Um, Lots and lots of residential experience, and I am joined here by Ronnie Justice Jr., our resident mortgage lender with OVM Financial. We are here in their offices on a rainy, dark winter evening
Definitely.
coming to educate you guys. And so we are quite excited to share with you some of this information, and this will be up and current. For the next 90 days. This information that you're going to hear tonight is going to kind of help you across the board, okay? But a lot of the mortgage information, 30, 60, and 90-day cycles are pretty much how that works. So that information, if you need anything further, will be in the later posting of this with all our contact information to get up to the minute information if that's what you choose. So let's just get on into it. Um, Ronnie, we're here.
Definitely. I'm glad to be here. I'm glad to be of service to everyone out there that gets an opportunity to see this. Hopefully, I provide some great value and knowledge to everyone, and knock off a couple of questions that you may have had about this real estate process, especially the financing. You can't do any shopping without money, obviously.
Yes.
So I'm saying that to say, once we get started, I'll try to get through all the information. But like T said, you will also be able to get all our information once the video is posted, to be able to reach out and give us your definite situation that definitely pertains to you and your situation per se, versus the general information that you'll be receiving right now. All right. Outside of that, I look forward to get started. Just like I said, I'm gonna try to get through the information in a timely manner, respect everybody's time, and hopefully, like I said, the value is there. Um, so basically, starting off, like I said, anything you do shopping, whether you go and look for a car, go to the grocery store, even a corner store, whether you go and play a number, get gas, what have you, right? You need to know that you have the money to be able to do just that, right? So at the end of the day, a lot of people start with the realtor. Realtors stand out front more or less, so than the banker in this process, right? They get the glory. Most people know everybody. Most people know five realtors. In your phone, Facebook, what have you. You probably much know that you can get in contact. Most people don't know a banker, but ultimately, like I said, you want to know that you are able to go shopping and the funds will be there when it is time to do just that, right? So at the end of the day, you can start with a realtor, but they're always going to refer you back to a banker, right? Once you get with that banker, we'll run through some numbers. Obviously, it'll start with how much you make. We'll gain all the documents that we need from you to learn, like I said, between your pay stubs, W-2s, if you are self-employed, we will need the last 2 years taxes, any other type of pay you get, whether it's disability, what I want to say, Social Security, pension, retirement. We'll just need the award letters and any documentation surrounding those as well. All right. Once we get the income documentation in, then obviously we'll do a credit pull. Always try to start with a soft pull, right? And I'm gonna say this to say, whether you use me for your business or go elsewhere, be sure your lender at least starts with a soft pull, because most time you won't even be in the realm. So there's no need to create an inquiry or hard inquiry and drop your score a couple of points or what have you, just to see that you already weren't ready when I could have did it with no hurt to you, no ramifications or whatnot with the soft pull. I'll say that to say. So I'm saying that to say, ask your lender to at least do the soft pull first. Once I know we good, because I need to know if you're approved, I have to do the soft hard pull at that point. All right. Um, like I said, once the documents come in, I run your numbers, we get your DTI, which is your debt to income ratio, right? Your credit score basically lets me know that I can lend you money at the end of the day, right? It gauges you how well you are paying people back, whether you're from the 450s up to the 850 or what have you. Everything in between pretty much gauges you based on you repaying your debt to whomever that you owe. All right. Um, your debt to income ratio is what depicts on how much money you are able to get. Right. So at the end of the day, your FICO score tells me, hey, you can lend this person money. Your debt to income ratio lets me know that, hey, I can lend you up to 400K, 300K, 250K. And that number is strictly based on your debt divided by all of your income. All right. Once you get that number back, then you can add this extra debt, everything that falls under whatever guideline based on the type of loan that you'll be in. FHA normally around 55%. Conventional is around 50% of that income. VA, they have it a little better. They can go up to 65%, or you contact myself from the company we working with. We have no overlays, so I can go a little bit above 65% on those VA loans to help you out. Um, like I said, once we go through that process of me collecting all the docs, I submit you to for pre-approval to our underwriter. Once you get that pre-approval, that's like you walking around with that blank check, like, hey, Ron just approved me for 400,000. I have every dollar up to that amount to spend. All right. You get with a realtor. Once that pre-approval happens, like Tierra, once you get with a Tierra, you definitely are ready and prepared to go shopping. And you are shopping with that confidence of knowing, like, hey, we already went through a little bit of background. We did all the hard work. We already know that this money is available. So that way, like, there's no way you have to second guess yourself while you out there shopping with a realtor. And honestly, most realtors aren't taking you around shopping without that full pre-approval now. All right. So, like I said, once you get that pre-approval, I will pass you off to the realtor where, like I said, you guys will start the shopping process. All right.
All right. You gonna grab the plug? Okay. You know what, you guys? I had to go off because first of all, I see it's not a lot of people in here, and I wanted to make sure that we were advertising again live to Facebook and our other social medias just to let people know so that they can maybe join in on the live. I mean, this is my first time. This is my first time doing this. So an actual live class that we are facilitating. We just are getting calls of people now beginning to come in. So with this starting between 6 and 6:30 and now it being 7, you can imagine how we felt that maybe people were not going to make the trip in the rain. So considering you're looking at flawless living made simple, I figured that we could just relax and have this conversation. So I'm happy that Ronnie kind of gave you guys a background and a little bit of the information concerning the mortgage process. And that is exactly what this information is about this evening. And then before me, I have the most amazing thing, which is called the Homebuyer Roadmap. I designed this map a couple years ago. I had a good client and colleague and soul sister friend that was asking me to put together some things for an event she was asking me to speak at, and it kind of sparked the idea for me to create this Homebuyer Roadmap. So we have this available on our link tree, but then we also give this away to anyone that we do home buyer consults with. And although you can't see it as clearly, the links again will be down below, and you can actually download it yourself or reach out to us directly, and we'll send you pretty much the full 11 by 17 home buyer roadmap. And so our home buyer consult greatly reflects the home buyer roadmap because we consider this something that is interactive, for both you and your family, and or just you and your goals. This is something that can almost be, that's the reason why it's so big, is because it's similar, or I consider it a home buying vision board. It gives you the steps laid out 1 through 11, and you go through it. And that way, after you have that home buyer consult, all the stuff that we talk about, although you will get little papers and things to keep up with, you have this as a visual representation to keep you on track, and you can actually mark your steps to home ownership. So like Ronnie was already telling you, the first thing you have to do, you're either going to choose an awesome real estate professional like myself or someone on our team. And the second thing you're going to do is choose a lender. However, that can flip flop because we work hand in hand with the lenders when you're borrowing money to do the purchase. So it doesn't matter. You can meet your lender first, you can meet your realtor first, and hopefully you have a smart lender that works with us, and then you'll be very, very well taken care of. So once you do that, you are going to, like Ronnie explained, you're going to go through and get your financing. So not only are you going to get your financing with the lender, you're also going to organize your finances yourself. Before you even start the home buying process, you do want to talk to a lender, talk to an agent, and know what is the average credit score that is required to get a good quality home mortgage. And when we're talking about good quality, what we're meaning is you're not paying extra interest for those 20 or 30 points that you could easily help to fix and repair on your credit and correct before you go through the home purchasing process. Most often, people that I speak to, if they're not familiar with the credit, they end up being about that average of 30 to 50 points. Am I right?
Right. Yeah, that's a great point as well. Like what T said, definitely I would speak to a lender, whether it's me or any other lender. At least start there before you go off your what I want to say assumptions or what have you, or what your best friends, cousin, brothers told you about
Absolutely.
what credit looks like or whatnot versus talk to somebody who was actually in it and doing it daily, in and out. So that way you can get the answers from them. Because I've saved a lot of people from spending a bunch of money that they thought they had to on credit when it was something they was worried about spending money on that I overlooked. You know what I mean? At the end of the day. So I'm saying that to say at least talk to your lender if this is the process that you know you want to go through as far as home ownership for fixing your credit. If you just want to fix it to buy a car, I mean, it's crazy, but in itself, but you can go that route. But if it's for buying a home, talk to a lender or whatnot, so that way you can get the ground rules or your game plan laid out for your situation because everybody else's isn't yours. Your path is yours. And mortgage is
That's a
one of the
great point.
most situational things that I've ever done. You can have people making the same money, look the same type of bank account, same whatever, everything. You know what I mean? But that mortgage is still going to fall in place where it doesn't align for both people. So I'm saying that to say definitely talk to a lender before you go spend money on thinking you got to fix something on your credit or whatnot.
Absolutely.
Sometimes get your score changed in 3 to 4 days and it saved you less than half of what you thought you was going to spend. All right.
Right. And that's what I'm saying is that it's almost like I tell people all the time that I would always go to a mortgage lender first and looking to correct credit before going to credit repair.
Right.
Because credit repair is like, it is going to repair. It puts a band-aid on damage as opposed to actually going somewhere where the investment in assisting you to get the credit corrected and or repaired and or updated not only benefits you with getting the goal of getting a home or property, but also benefits the mortgage lender as well because they're able to do their job and do it in a way to help you to get more soluble credit. So definitely look at your credit and your finances as far as how much you have saved. There's somebody at the door.
Mm-hmm.
Yeah, there go. That's the Shauna. So you figure that you want to make sure that you have your credit together and you also want to organize your finances. So that means knowing how much money you have available for down payment. The interesting thing is that it's very rarely, if ever, that I'm going to ask a client in a home buyer consult how much cash or money do they have available, because to me, I like to assist a home buyer based on how much they want to make as a monthly payment if they're using a mortgage, right? So if they're using a mortgage, we do not want to go from how much you're qualified for, because a lot of times you'll be qualified for more than you're willing or wanting to spend for your monthly mortgage over the course of 30 years, right? So that's the same thing with down payment. You want to make sure that you're saving about 3 to 5% for down payment on a home that you're qualified for. So if that is 300,000 or 500,000, you want to make sure that you're saving about 3 to 5% minimum towards that home purchase, so that if you do end up qualifying for some of the great mortgage programs that are available here in Virginia, here in our specific area, and city by city, and as well as nationwide, right? You want to save that so that then you have the money but don't need it versus need it and not have it, right? It's always better to have saved more than what you will need. So in examining your finances, it's not just about the credit, because it's also going to be about how you filed your taxes. For so many self-employed business owners, there are people that we in our community a lot of times like to file credit haphazardly and try to take a loss because we don't want to assume the responsibility of paying the tax company and pay, well, the tax company, the IRS, the money that we've actually earned from the gains that we've earned. However, guess what? As a 1099 or a self-employed business owner, what ends up happening is you're actually counting yourself out by taking a loss because you're making yourself unable to purchase when they average 2 years of those earnings. So when we're talking about examining your finances, it's not just about credit. There are three main factors that play into it. Your taxes and how you filed your taxes, especially if you're self-employed. Your credit, yes, as well as your down payment and the savings that you put up. Because like we just said, it's better to have it and not need it and not have it. And the more money you have saved, the more negotiation power you have to be able to greatly influence the decisions you make as you're out there shopping in the market, especially considering we're approaching the spring market. Okay. Now we kind of slid into down payment, and now I'm going to jump back over to Ronnie. That's why it's a real estate broker and a lender here so that we can kind of bounce off each other and he can tell you more about payments and how they apply to different programs. And then I'm going to come back and tell you about some of the programs with grants in the area. Take it away, Ronnie.
Definitely, definitely. So down payments, you have different ones for different loans. Conventional first time home buyers around 3%. FHA's down payment is always 3.5% of whatever the price of the house that you're buying. All right. VA loan, no down payment. You can't beat that for those that serve the country and have access to that. Thank you for the service. But like
You
I
are
said,
welcome.
they
You
one
welcome.
next to me. But like I said, they don't have a down payment. USDA also doesn't have one.
And that's
So
a good loan.
that's something that you could look up. A lot of people don't consider. I mean, maybe it may be a little outside of where you live at. Sometimes it's a zip code right over the next town over that you could have bought a USDA loan, home with the USDA loan. All
And
right.
new constructions too, right?
Yes, exactly. And they're coming out with the laws for those that are in those areas that you are able to use USDA loans to buy manufactured homes, existing manufactured homes, not brand new.
Okay.
All right. So I'm
That's good.
saying that to say it's a lot of things that are available to you. But also, like T said, there are a lot of programs in every area, not just this one. So it's good to reach out to a good lender or get with a realtor that has a good lender that has access to all the products. A lot of your banks don't. Okay. I'll just be upfront with you. They'll have some internal ones, but some of the state ones are a little bit stronger or whatnot. So I would say get with a lender that could offer you multiple different products to give you different options. Because like I said, every situation isn't the same. You want to have something that definitely fits your situation so that way you know, like, if I gave you this mortgage today, you got the best deal going in the market today. All right. Now, if you couldn't sell this loan, and I'm saying as far as refinancing another 5, 10, 20 years, no matter what happens in our government or economy or whatnot, I want to know the day that I took care of you, I gave you the best deal on the market at that time. So in order to have that, you need to get with the banker that has those options available. All right.
Mhm. Okay. Well, that all sounds good. I hope you guys are taking notes. And for those of you that are not watching right now and watching on the replay, just drop a like down in the chat. Just drop a like and say that you did enjoy and did learn something from this information because we are not doing this for nothing. We're doing this because it's our intention to inform the community.
Right.
So whether you show up now or you show up later, we're going to still be here in business, ready to serve.
Definitely.
So now on to the programs, Hampton Roads, and all that are watching. So Virginia Housing is normally the first line of defense when you're looking at home buying and first time home buyer programs, and that is because they're directly connected into. And not so much connected into, but they directly benefit the FHA first time home buyer down payment. So if that down payment is 3.5%, they give you 2.5%. So you actually only end up having to, after attending one 8-hour class online or a 6-hour class in person, in which you do budgets and you have to be accountable for your time and what you learn there, pass a test. You get a sheet of paper that's worth 2.5% down payment on your home. And that is qualified for whatever you're qualified up to, as long as your income collectively in a family of four is under. It went up from 152. Is it higher now? A little bit higher?
No, so actually for that program, for them to get 2.5% where they don't have to pay back,
Mhm.
the income is a little lower and it's around 96K.
For four?
For four, it's around 136 if I'm not mistaken. But whoever is interested, all you have to do is reach out and then I can send you the exact number or what have you. But like I said, that number is a little lower than if you just get down payment assistance. And I always want to be clear, like a grant is completely separate from down payment assistance. Down
Mm-hmm.
payment assistance, right, just another loan. Okay,
Mm-hmm.
I'm going to be frank with you guys. It's a complete another loan that's built into. Well, actually, it's not even built into. I just tell you that this is your mortgage, but it's actually two separate loans consisting of that number. All right.
Mm-hmm. Mm-hmm.
Now, grant is what it is. It is given to you, and you don't have to pay it back. In the state of Virginia, they do give you, say, for instance, the FHA loan. They give you 2.5%
Right.
of that 3.5 that you do have to down pay. So that is correct. And conventional, they give you 2% of the 3% down payment on that one.
Right.
And then USDA and VA loans, they give you help on your closing costs because again, like I said, both those loans don't come with down payment, so they give you up to 2% on those
Yeah.
on your closing costs to help as well. As long as you qualify and meet the certain guidelines for income requirements, household size, and they also do whole household income, right? So let's just
See,
say
that's
it's
what I was gonna
five to
get
six
into. You
people
gotta tell them
in
that.
a home, right?
Mm-hmm.
And only two of the five are on the loan, but the other three work, right? If you're getting a grant, I need everybody's income in that house. That's whole household, right?
Right.
But if we do down payment assistance where you get in the second loan, then I can just do qualifying income for the people that are on the loan exactly. All right.
Absolutely.
So just be aware of that when you're moving forward with this process, whomever you're talking to, information given is information received and used. Okay.
I mean, and that is some good information. And sometimes it's so good to have somebody else to say the stuff that you always saying and be the actual person with the money. And
Right.
that's who this is. That's who this is.
Right.
So this company, being a mortgage lender and a mortgage banker, he is the one that works with you on the side of the financial side. And I will tell you that, like I said earlier, as a real estate broker and or if you're an agent, it's really not necessary for your agent to know how much money you have. Your agent should not be all in your finances like that. You do not, and it's completely up to you the relationships you develop. However, as an advocate for fair housing, I just know that sometimes when we as consumers and first time home buyers walk in with an agent and we're telling them how much money we have or how much we're being qualified for, you're really at times putting yourself at odds for someone that may just be looking to earn money.
Right.
And so I would say that when you're, even though in your experience with a real estate agent or broker and a mortgage lender, those experiences are fiduciary, you never know, which means that they are unable legally to discuss your personal business. That doesn't mean that they don't need to close in the next 30 days and they're going to steamroll you into a house that you may not be best for you because you're qualified, excuse me, at an amount that will earn them a large commission. So one of the biggest things that I want to just, buyer beware of as an advocate for our clients is that as the real estate side, I don't need to know necessarily how much you have saved towards purchase. All that matters to me is that you have been pre-approved with the great lender, right? And that you've learned and that I am aware of the programs to assist you in the process getting to it. And then you have your lender to assist you with the money side. And as the agent or broker, all we should really know is how much is that payment you want to pay, because that is how we can determine how far you want to go. And I know that I keep saying this, but it's so important because if you're qualified, I've had this happen so many times, especially as interest rates and housing rates continue to rise. So sales prices increase pretty much 10% per year in our area, and they went up another 31,000, almost 31,000 from 2024 to now looking at the top of the 2025 market pre-spring. So that means that we're in a 26 to $30,000 increase year over year on average in our marketplace. And when you're spending that type of money, what matters is that payment. So that means you may be qualified for 450,000. But if you don't want to pay 3,400 a month, then we maybe should not be looking at 450,000. Just because you make it don't mean we have to spend it all. It's about putting you in a home that you can live in for as long as you intend to and afford, not based on an income that you'll earn later. And that is my job as your advocate as we search out. That's the limit of my understanding of your money, right? So just think about that when you're choosing an agent, no matter where you are in the country. Consider that, okay? So then moving on down the home buyer roadmap. Okay, we talked about down payment. And now you have to think about the earnest money deposit, right? And the earnest money deposit, what I tell people is that's your skin in the game to a seller. So once you got that pre-approval, you know how much your down payment is, or have an idea of how much it'll be based on the house that you're looking for. You're going to go out looking for houses, right? And you're out there looking for houses, and finally you find one and you put an offer in on that property, and the seller accepts. The seller says, okay, I'll take that offer. And you say you're going to close in 30 days. Okay. Well, guess what? The earnest money deposit is your skin in the game, right? Like right now, I have braids. When I schedule my braid appointment, I have to put a little money down. And then when I get there, I don't have to pay that money I paid down because I already paid it. I just paid a balance. So when you submit your earnest money deposit, that is a deposited check that your title or closing company deposits on your behalf to show the seller that you're serious and approved to move forward with the purchase. And from that, you slide right into the home buyer home inspection. Now, I don't care how many houses you bought, whether you're a first-time home buyer for the first time or a first-time home buyer for the second or third time. I see y'all. I know about y'all, okay? Every 3 years, you a new home buyer if you sell, okay? So think about that. Every 3 years, you can use FHA again if you sold your property and you're no longer a homeowner, okay? So I have plenty of people that I have worked with that are first-time home buyers again, okay? And at that home inspection, you want it because guess what? You can't know what you don't know. You just can't know what you don't know. And when you're out, looking for a car, and this is the best way because I heard Ronnie slide in some little slick car talk earlier about why would you get your credit fixed for a car?
Why would you? Where's that?
Ronnie is anyway. It's not good that. Okay. I'm just saying when you go to buy that car, okay, when they pull out the Carfax, okay, you've already done the test drive, haven't you? And when you get that Carfax, you're not hoping that they show you the car has been in 7 accidents. You're hoping that the car looks clean and that it hasn't been in any type of damage because you want the car. That's the same thing with a home inspection, meaning that if you've made an offer and you've submitted an earnest money deposit, you're not now having a home buyer inspection to go over there and say, oh, this house is crappy because you made an offer because it was a house that you deemed you could live in. So when you go there, you're going to find out about the water heater. You're going to find out about the sprayer. You're going to find out about what type of tile is that in the backyard as you go towards the pagoda near your shed, okay? And then just in case there's something in the crawl space, we're going to get them to fix it. And just in case they haven't replaced that area of the roof that was damp 8 months ago, they're going to repair it. And guess what? If there's 75 things on that list and you do not want to move forward, that is your time to walk away from the sale. However, the home buyer inspection is not a loss to you, it's a gain because you know goodness well you have never had a tankless water heater. Now, how are you going to work it? Get that home inspection, right? Those are the things that it teaches you about the purchase you're about to make. So you do not want to skip a home buyer home inspection, whether you bought one time or you bought 4 times. Always get a home inspection.
And always show up, be present, learn on the spot. Don't get verbatim word from whomever, especially being the fact that you're going to pay that $400 to $500, $600 depending on the square footage and where it is.
Mm-hmm.
Show up so that way you can receive the information about the home that you're purchasing. It's your investment ultimately. And honestly, to me, the inspection is pretty much what you're willing to deal with, because you may walk away from it because it got 6 or 7 things and somebody would have bought it with 15, 16 things on there. You know
Right.
what I mean?
Everything is
So I'm
perspective.
saying that to say, to me, the inspection is basically what you're willing to deal with. Most people would have rented the same house that they turned down for buying. You know what I mean? So I'm saying that to say, take the inspection into consideration. Sometimes it's just a little honeydew list. Sometimes you 10, 15 years down the line before whatever that man told you need to get fixed. So I'm saying that to say, show up, but definitely get it. It's more than worth it to you when you're doing this transaction. All right.
Absolutely. Absolutely. And so with the home inspection, you also have to consider one of the other things that we talked about a little earlier with your down payment was closing costs, right?
Mm.
So, you're doing the home inspection. And so now you're getting to the point where you are beyond the contingency, meaning you and the seller have both agreed that you're going to complete the purchase. Now, of course, you've already organized your finances. You've already had a great lender. So whether you're using a down payment assistance program, whether you've negotiated with the seller to assist with paying some of your closing costs, whether or not you're paying your own closing costs because you were able to save so much money on the other end by having down payment assistance or a down payment grant. Just like we talked about earlier, if you're saving 3 to 5%, 6% towards the home purchase, and you end up only having to use 1% of that for your down payment because you have down payment assistance or grant, that closing cost is not an issue, and it may give you ability to buy more house or to have a better option and experience with your house or beat out other buyers. Because as we go into the spring and summer market, I am predicting that it is going to be a competitive summer. I
Mm.
think that a lot of people I think that a lot of people have been scared and shaking in their boots. And I think that the ones that are not scared, especially the ones that look like us, I think we are back in the game. I think we are minding our business and getting our stability right. Okay. For those of us that can and know they are doing it. And so I think that it's going to be quite a competitive summer. Do you disagree?
No, it's competitive right now. I'm trying to tell you, we already coming in above asking. I'll say this to say for the people that are considering it, start now. You know what I mean? Before right now, it may be 6, 7, 8, 9 offers on the table, but that number will go up to 13 to 16 offers. So I would rather compete with the least amount of people
Right.
to try to make my offer more attractive so it's seen and stand out versus 16 to 17. I have a deal now where they were lined up literally down the street in the whole neighborhood. The realtor and the buyers were sitting in the car waiting on their little 10-minute block to get into this home to look at.
Right.
It was getting that serious, and that it was a affluent neighborhood. A lot of people, were aspiring to live in. But I'm simply saying to say we ended up winning that offer as well. But we came
Congrats.
in very strong. It was no closing costs. You couldn't ask for any help. They even waived the inspection. You know what I mean? So I'm saying that to say we got it. We got the inspection, but it was for information purposes. We couldn't use it against the deal or
Hmm.
whatnot. So I'm saying that to say sometimes you got to get creative to win the house that you truly do want. And that line wasn't as long for that neighborhood as it was for no reason. So I'm saying that to say you have to be ready, prepared, pre-approved, have an aggressive agent that can know
Hmm.
how to negotiate in those times when it gets as aggressive. But I'm saying that to say if you on the bench, I would say come off right before the spring and the
I
summer
mean,
really gets in. You know what I mean?
hmm
If you call me this week, it's the 12th. I probably can close you in the first week of March. You know what I mean? So
absolutely.
I'm saying that to say go ahead and get off the bench or whatnot, so that way you don't have to fight with all these extra people that have come out during the summer that don't mind moving and spending a couple extra dollars
Hmm.
on a home when you should have got it at 300K. Now
It's
everybody
three,
that went
340.
back and forth exactly right.
And
That
on
went up
top of
to
that,
340.
right, because we had a property that we had kind of like the buyers ended up walking away. They tried to come back and say it was a new rehab. They walked away at the top of January, right? At no fault
Hmm.
of the seller. The property went back on market about 4 days later, and it is now under contract above ask.
Mm.
Above ask, 15,000 above
Right.
ask, and that is January. So yep, it's gonna be a competitive year. So
Mhm.
I would definitely say that you want to be prepared and you want to be aggressive also in your savings. And then I would also say that for myself, and everybody does business different. I just think over ask appraisal and adding additional money over appraisal,
Mhm.
you have to be prepared to be in the house for 7 years. So if you are out searching, especially in our Virginia Beach and Chesapeake markets, and it gets really competitive. I know that a lot of people do money above appraisal, cash over appraisal. Okay, guaranteed cash over appraisal.
The lender will not lend you $1 over that appraisal amount. So what she's basically saying, if the house comes in and we're purchasing at 300K and the appraisal comes in at 300K, but you went in with an offer of 310, you owe that 10K out of pocket.
Right.
Okay.
And here's the thing. This is what I want to say about that. Because the last time we had a market like this, it wasn't no 10K. It was like 30.
Right. Yeah.
And so no, but we want to tell the people. And the thing is that we also have a strong property management side of our company. And for our clients that purchased in the last 4 years that are now leaving the area, they cannot afford to rent them
So,
because the mortgage is so high, in comparison to the liquid cash they had that they paid. So even in selling it, although they're not underwater,
right.
okay, the mortgage amount is greater than the potential rental amount.
Mm.
And so whereas if you're not paying cash, like if you're not paying cash over appraisal, you have not only that cushion, that nest egg for yourself to kind of like cover balance a mortgage if you have to leave the area. But it's much smarter in Hampton Roads to know that you're going to be in the property for 5 to 7 years so you can start building some true equity under you before you have to transition out of the area. Right. So if you're transit or you before you move up homes, like actual physical primary properties, you want to get some equity under your legs. And that I would say closer to 7 years, especially if you pay cash over appraisal, because that value is still added into the purchase of the home, even though you're not financing it. I hope that makes sense. Does that make
Yeah,
yeah,
definitely.
so that's the
Equity
thing
is
is that
everything. You need to
right,
be in there a little while to build it. And I say once it's
right,
built, you got a little bit of power with you. Because I tell people, most people, especially if you end up investing and getting a few homes or whatnot, you turn those investment properties into banks once you build enough equity. You won't have to walk in there anywhere and ask for any more money. I'm saying that to say that's the power in equity, what it will do for you, your livelihood, your business, your future endeavors. You know what I mean?
absolutely,
You can fund a lot with that.
absolutely. And so now that we've kind of covered closing costs, we're getting on down the line. We at number 8, and that is appraisal. So just like we were kind of just touching on, the bank will not pay a penny over the appraisal amount. And you as the buyer, you pay for that. And depending on the bank, some banks you pay for the appraisal at time of appraisal, and some banks you pay at closing. Ronnie, what does OVM do?
Man, look, as soon as I order it, I'm gonna send you the link. Go ahead and knock it out.
Yeah.
That's the easiest route. And my previous company, I was burned a couple of times with appraisals, because we didn't have to charge. It was up to the banker, and I was pretty much cool with a few people. One of the ones that sticks out more, the lady that was buying a home, sad to say, died the week of her closing. So she didn't pay the appraisal because usually we only charge right at closing or whatnot. So
That is
basically
sad,
that fell
sad.
on the banker. So whenever appraisal gets done, the appraiser and the inspector get paid no matter what's happened. If you don't buy the house, doesn't go through, it doesn't matter. The appraiser and the inspector provided their services, so they get paid. So ultimately, if the deal doesn't go through and the borrower doesn't pay, it falls on the banker. So most bankers now just charge up front, like you got to pay before it happens.
Absolutely. So that appraisal, just have your money. But that's the thing. We talked back in number 3. That's why you have the home buyer roadmap.
Right.
That's why you have the Homebuyer roadmap, is because back in 3 we said organize those finances.
Right.
So you got that little money, that ain't nothing. You almost at walkthrough inspection time. Okay.
Mm-hmm.
So now with us, now I don't know what other people do because we are Walker One, right? We do 2 inspections, final inspections of the property on your behalf with you. Why do you do that? Oh, why you want to? Well, this is why. It's because, first of all, like we talked about earlier, when you were getting a home buyer inspection, let's say there were some repairs to be done. Now, on the day of your closing, you and your partner, you guys have gotten haircuts, have gotten your do right, you got on your nice dress or your nice suit, and you are ready to take pictures, okay? We are not going to that house that day with your nice outfit on, and then the repairs are not completed. So 72 to 48 hours before the actual closing date, we do what is called a pre-final walkthrough. Now, why do I do that? Because I've been in real estate for 21 years and I have come to houses on the date of closing and HVACs have been missing. I have come to houses on the date of closing and repairs have not been completed. I have come to houses and siding has flown off because of a windstorm last night, right? And anything not done pre-closing is no longer the seller's responsibility, right? So that means that you have to check the house twice. And on the pre-final walkthrough, if you're like me, you haven't brought nobody with you to your home search. You haven't brought your mom and your dad. Some people do, and there's nothing wrong with that. Bring who you want, do what you want. But most people, especially couples, normally go shopping together. And that pre-final walkthrough gives you the opportunity to bring the children that weren't able to attend, the family members that are going to help you decorate. You'll be able to measure for your bed frames and all your furniture you want to put here and there while running the dishwasher, the washing machine, checking for repairs. And if there are inspection repairs, you're getting a re-inspection. So you have the home inspector coming back out. Now, do I always suggest this? No, but guess when I do? I suggest it if it's under the house or in the attic. Why? Because I'm not going up there. Are you? Are you going up there? Because I know I've had clients that come with their little step stairs. So I've had lots of clients. And there are clients that will come with their step stairs and go in the attic and do what they need to do or check it out. Me, though, I'm not going in your crawl space and I am not going in your attic. So we're going to get a reinspection for anything that we can't physically see. If it is something that is outside of our sight as lay people to construction, remodeling, and residential rehab and building, we're getting a reinspection to ensure it's done because you're not going to call me 3 months later and tell me about something that was repaired that wasn't repaired. I'm not going to have that happen because that's not professional love and care. So we do that pre-final walkthrough. We make sure everything is good, or we tag. If it's new construction, we do a new construction inspection from the beginning. And if there's anything that did not meet code or did not go as planned, we coming in there with the blue tape, baby. We blue taping it down, okay? And we're going to blue tape it down. And then once all that is done, we come back on the date of closing with your nice outfit, and you don't have to worry about wasting it. You don't, because you know we are going to close that day. Okay. And so those are basically the steps. I know it was too smooth. I know it just felt too easy, but that's how it is when you're with great people that care about the result for you, right? This is Flawless Living Made Simple, you guys. I hope you enjoyed this broadcast. We were joined this evening by our newest agent who does not want to get on camera. We were joined this evening, and I'm honored to have her here, Miss Tashana Torrey. She is new to the market. She is a new agent, and she is already beginning to help buyers all throughout Hampton Road. So we're going to put her information down below as well so that you can get to know Tashana. Ronnie, thank you so much for taking the time to do this.
Everyone. Appreciate you. And definitely look forward to helping any family out there that needs the true real assistance. So they're not made out to be a dollar sign, but made to add value.
All right. Well, we definitely appreciate you guys, and we look forward to connecting in and around Tidewater. It's Flawless Living Made Simple. Take care. Bye. No.
Oh.
Wait a minute. But what happens?
Not yet.
Yeah, because I want to figure out how.
You're too far over.
Okay. So I just want to see how do we.
You trying to share?
No, I'm trying to make sure that it's like saves. Let me see. Something. We had 3. Hopefully we can get the content so we can reshare it. I never did this before, so just in case for those of you that missed it, if you didn't miss it, lucky you. Oh God, I'm too far over. All right, and